stocks are making records, but cash levels are making records. How can both things be true?
Yeah, I mean, I guess you could ask the same question about why the NASDAQ and gold had about the same performance over the last 12 months. Some of it is defensive positioning, right? So a lot of people think of the stock market indice as representative of lots of different companies. But when you have these crowded positions in technology, what you're seeing is the technology is really driving things. And that's a defensive position. Just like you said, stocks going up. But in this case, defensive, cash also defensive. And I think that's what you're seeing.
So everybody talks about all this cash on the sidelines. I sort of hate that term because I don't consider the bank a sideline. It's a safe place. I mean, you're not in the game, but you're sort of waiting. And I guess the idea being is that the bulls will say if that even some of the trillions are put to use, stocks could have another leg higher. But that's always the case, Sean. So where do you guys at Citi Personal Wealth still see value in this market?
Sure. Well, what you're seeing is you're seeing a bifurcated market, right? So you're seeing kind of, I guess, COVID defensives like technology, healthcare actually do quite well. But then you're also seeing sort of the COVID cyclicals not doing that well. So they actually really haven't recovered that much. So we actually think, technology is fine to hold on to. I think it makes sense. And in some ways, I actually think with the virus not that well contained, it actually makes the case for technology. I think you might see a rotation out of technology once the virus is more contained and it becomes less defensive. But we like the cyclical names. We think industrials, small caps will eventually recover over the next 12 to 18 months. So those are the areas where we're looking at.
What's wrong with financials? They're not performing at all. I mean, they're turning into the oil and gas of investing. And I don't mean that in a good way.
Sure. I would say it's probably tied to the 10-year Treasury yield. If you have low yields, it's very difficult for banks to make money.
Is there any sign of that turning around, Sean? Meaning, at some point, will the financials, which are down year to date 21%, as we just showed as a sector, be a good value for your clients' money?
I think so. I mean, we tend to look at things from a 12 to 18-month time frame. So I actually think banks will do better. And I think when you start to see the economy recover, you should start to see yields rise as well. But the Fed is pushing down Treasury yields, and they're pushing down yields across the curve. So, I think there's going to be, a period where you're kind of battling that out, where yields probably should be higher than where they are. And I think that will eventually become true, where they do start to rise, but it might not be until the later part of this year, maybe early 2021, when we have vaccines and the recovery looks more, firm.
I know you guys do some great surveys on what people think about things like the economy, better or worse, 12 to 18 months. I mean, it's kind of hard to picture it worse, I guess, Sean, but what are your clients saying?
No, I think if you ask our clients a simple question, where's the economy going to be in 12 to 18 months, I think the answer is generally it's going to be in better shape, right? I mean, whether it's through vaccines or simply learning to live with the virus or more effective treatments, any of those things, I think you're going to be seeing a better economy. But it's going to take time. And I think that's a really key message. We just saw U.S. real GDP decline by 33% at an annualized rate. Maybe we get 20% growth in the third quarter, but we need an annualized print of 50% to get back to where we were in the fourth quarter of 2019. So it's going to take time. We're seeing that with the payroll data as well. And I'm not sure ADP is representative of tomorrow's payroll report, but it's going to take time to heal. If we look at ADP, it did miss the official employment report by about a little over 3 million in the last two prints. So I'm not sure it's indicative, but we'll see. I think it's going to take a while for the labor market to heal, and we're going to need more stimulus. The policy bridge wasn't long enough.